Hi dear traders, the past trading week was marked by growing concerns over rising inflation in the US. Consumer prices are anticipated to accelerate further, meaning that the US Federal Reserve will have the ground to raise interest rates. This in turn enhances the investment appeal of the US dollar. The US dollar index, which measures its strength against the basket of 6 major currencies, went up by 0.36% by the end of the week. As the annual inflation rate remained steady at 3.7% in September, traders ramped up their dollar purchases that started with the Fed Minutes publication. The minutes once again reminded the market that the central bank is determined to bring inflation down to 2%. The single European currency eased amid existing divergence in the monetary policies of the US Federal Reserve and the European Central Bank. While some ECB officials advocated for continuing the rate hike to avoid showing hesitance to investors, the economic conditions in the Eurozone countries are particularly unfavorable and threatening a recession. This sentiment was further solidified as the International Monetary Fund downgraded its projections for the European economy. Consequently, the euro fell to an 11-month low against the dollar and is likely heading towards parity. As for the British pound, it has also lost its shine among investors. Meanwhile, the UK economy posted growth that matches analyst forecasts, registering a modest increase of 0.2% in August. Given the 0.6% decline observed in July, it's evident why the pound hasn't grabbed investors' attention. So, by the end of the previous week, the British currency depreciated by 0.46% against the dollar. Meanwhile, the Japanese yen continues to teeter on the edge of an intervention from the Bank of Japan. Towards the end of the last week, the dollar-yen pair made an attempt to break through the pivot level of 150 yen per dollar. At the same time, Japan's monetary officials expressed reluctance to intervene in the foreign exchange market, saying that the current yen's valuations mirrors well the underlying fundamentals of Japan's economy. Despite strong bullish sentiments surrounding the US dollar, gold buyers had even more reasons to rejoice. The price of the precious metal surged by over 4.5% last week amid the escalating conflict in the Middle East following Israel's advisory for civilians to evacuate the Gaza Strip. Gold is likely to show a sustained rise further on thanks to its status as a safe haven asset. Geopolitical tensions in the Middle East also had an impact on oil prices. Thus, BRENT crude surged to $91 per barrel. Iran's foreign minister issued a stern warning, suggesting that Hamas could open other fronts if the Gaza blockade continues. In addition, the United States has imposed new sanctions against tanker owners who are shipping Russian oil at a price higher than the price limit of $60 per barrel established by the G7 countries. All these developments increase the risk of a potential shortage of energy resources. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!